All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about some of the Yieldmax ETFs because as you'll notice today, YMAX down again 1.56%, whereas the market's actually up 0.11%. So I want to talk about this discrepancy between the market and between YMAX. I also want to talk about some major stocks within YMAX that are actually falling today. The biggest one, BABA, which is Alibaba. This is a stock that I currently own about $6,000 or $7,000 within. As you can see right here, it's about 6.5 right here. And I want to talk to you guys about my opinion on this recent kind of like fall within Yieldmax ETFs and some of the other ones as well. And the reason why I kind of want to talk to this about this and touch on this is because I am primarily a Yieldmax investor. And of course, it's obviously never an amazing sight to see when your portfolio is down about 2.45% or about $1,300 on the day. And I want to talk to you guys about what I'm thinking with this, why so many Yieldmax ETFs are going down, why the underlying companies are going down, and hopefully kind of justify this so we can make smart decisions going forward with our investing. So if that does sound good, we're currently up to 7,566 subscribers, 283 subscribers in the past 28 days. So that is awesome to see. And what's not awesome to see is our portfolio going down. And am I concerned? I'm a little bit concerned, but with reason. Of course, you're concerned whenever your portfolio goes down. I always view this as a buying opportunity. I do think at the current moment, YMAX is a great opportunity if you're looking to potentially get into it or reinvest and buy more shares. Currently, I'm not doing that. And of course, this is not financial advice. This is for entertainment purposes solely, but I'm telling you guys my opinion. So YMAX at $15.81, I think that's a pretty good buy. And you can see here over the past 6 months, it's been hit very hard. Not only has it trended down from about $18.50 to now $15.81. It's the lowest marker that it's been in within the past year. And there's a lot of reasons for that. A lot of underlying stocks, although, for example, Alibaba has done very well, a lot of stocks are trending down at the current moment. And it's very strange. It's going off of strong earnings in each of these underlying stocks. And I think it's going off the fact that a lot of Yieldmax ETFs, for example, ones like TSOY have been hit very hard, OARC, Apple has done very well, but NVDY has also been hit pretty hard. Some strong names have been like AMZ, FBY, even Google has been hit pretty hard. Coney's been hit pretty hard. So although when we look at, for example, the S&P 500 and it's doing pretty well over the last little while, hasn't necessarily been hit very hard. A lot of the Yieldmax ETFs, which are weighted heavier in YMAX, for example, than in SPY, they've been hit very hard. For example, Coney's been hit very hard over the past little year. PYPY has been hit very hard over the past little year. SQY, MRNY, of course, that one's been hit. Another one, AIYY, which we'll talk about today, has been hit very hard. So lots of Yieldmax ETFs have been hit very hard. And of course, if they are great underlying companies and they're performing well in terms of their earnings, it's only a matter of time before they should bounce back. Of course, this is just my opinion, but let's talk about some of the major ones today because we noticed YMAX down about 1.45%. And really, I didn't see too many positive companies today within YMAX's holdings. So I'm going to highlight really the downside. Babo, Alibaba, and Babo. You can see here that it's down about 9.6% and it's had a huge run up over the past little while. I am not concerned at all about Alibaba. And the reason being is because they recently released their fourth quarter earnings and they came out fantastic. They're on the exact same growth that we want to see when we go quarter over quarter. See here, their total revenue absolutely soared to $280 billion for the quarter. Their cost of revenue, it's a little bit high, but as well, you see here that their gross profit growing very strong, which is what we love to see. When we go to their balance sheet, you can see here that they're actively growing their balance sheet when we go quarter to quarter to give our best results. It's at the highest marker that it's ever been. Total assets, almost $2 trillion. It's $1.8 trillion and growing strong over the past quarters, which is good to see. Now, when we go to their cash flow. You can see their cash flow is very strong as well, generating about $70 billion worth of free cash flow in the past quarter. Of course, you could see they have heavy reinvesting at $111 billion. It's a huge marker, but this is a huge company valued at almost, we could see here, in my opinion, it's an undervalued company. It's valued at $300 billion. I do think there's a lot more for BABA to run, and of course the underlying, or the Yieldmax ETF BABO to run. And when we look at price targets for Alibaba, you can see here the price target $10 to $125, not bad. We have as well a price target by Barclays from 130 to 180, and then we have Morgan Stanley from 100 to 180. So there's a lot bullish looking for Alibaba. Of course, their earnings came out well, and really a lot of this downside today is based off of news that they're going to be spending $53 billion into new AI, artificial intelligence or AI in the next 3 years. This is seen as a downside because of course it's a huge investment for the company. But considering on the fact that within the last quarter alone, they generated $70 billion in terms of free cash flow, I am not concerned. So that's Alibaba. I think it's well positioned. I think it's going to be okay in the future. That's a Yieldmax ETF, likely to prop up YMAX. As well, we have another one, which is Palantir. Palantir down about 9% today, and it's down off of highs of about $122. So down about 20% just in the past couple days. Of course, this plays into YMAX's share price falling, and it had, once again, very strong earnings, surprise of 23%. When we look at their earnings quarter over quarter, what I'll do here, so go to their financials. They are, I never really liked Palantir as a company. For example, like I never personally wanted to own it, but that is just strictly my opinion. I'm very honest with my opinion. It's not a Yieldmax ETF that I'm likely to own, even if the stock price surges 1,000%. I'm not necessarily interested. Palantir, I'm pretty sure they sell those bikes that you use for your home and stuff like that. I might be wrong, but when I look at their income statement, their income quarter over quarter, it's growing pretty good. I think the overall kind of market cap is way blown out of proportion. This is a $220 billion company, and they're generating about $800 million every quarter. To me, that seems overblown. Maybe there's something that I don't see. But their gross profit is growing very nicely quarter over quarter. They did as well just report the strongest earnings, which is awesome. Their total assets growing, although extremely small compared to their market cap and the market valuation, very small, but growing nicely as you like to see. So it's a company which is growing their even year over year operating cash flow, doing absolutely fantastic. We go quarter over quarter and growing nicely, free cash flow growing nicely. So when I look at Palantir, they are a well-positioned stock. I do think they're overvalued, but maybe I am missing something within the picture. But once again, this is another Yieldmax ETF reporting stronger than expected earnings, has price targets which are about the 110 marker, about the 140 marker. So potential, they see potential in the eyes of analysts, which is great to see as well. And then another one which is falling is AI. For the Yieldmax ETF, it's AIYY down about 3%. So all these down days, even today, they really hit YMAX hard. And of course, I don't think SPY has Alibaba within it because it's a Chinese company. But for these Yieldmax ETFs, they are, of course, a lot heavier weighted within YMAX than they would necessarily be in SPY. SPY has a huge percent in, let's say, Tesla, Apple, Google, Amazon, Facebook, all of the kind of big tech companies. And all these little smaller companies maybe have a fraction of a percent, whereas in YMAX, they hold a much bigger stake, roughly about 2 to 3% per stock or ETF. So, of course, when we see Palantir or PLTY going down about 7%, that's going to hit YMAX much harder. But, of course, when it rises, it's going to hit YMAX much harder in the positive direction. So, it's something to think about on both sides. That's why I'm always looking for opportunity within YMAX and some of the underlying Yieldmax ETFs. But AIYY and the underlying stock AI also down about 3%. And you could see over the past probably 2-3 months, down about 50% off their highs. Not a super strong Yieldmax ETF by any means. It's kind of performing like MRNY. So this is an AI stock, and they're actually expected to report their earnings on February 26th. So in 2 days, this will be on Wednesday. So this is a stock where you could potentially take the chance and buy the Yieldmax ETF off their earnings, but stock it's been trending down. It's one that I have not been watching, but its earnings per share are negative 2.21. Not necessarily a financially stable company in terms of their earnings. Haven't checked anything else with them, but this is another stock, another Yieldmax ETF, which is hindering the stock price of YMAX today. And there's many more that are down about 1%. So potentially the way that you look at it, you could see an opportunity as in the discrepancy between YMAX and SPY, or you could see it as I don't like YMAX anymore. But personally, I still do like YMAX. I still think it's a potential good vehicle for weekly dividends, which is awesome to see. I do think a lot of the underlying stocks are undervalued. And even if we go to something like Tesla, for example, we do that quick. Maybe we go to as well Google quick, because I want to see exactly how these stocks are performing, because they have been hit very hard over the past 6 months to a year. For example, this is Tesla's chart. When you have, for example, a Yieldmax ETF, which tracks a lot of these major companies, I understand SPY too, but when they're down about 30% on the year, it definitely takes its toll. And when we look at Google, another example as well, because I just kind of want to see, let's see how Google's doing. I'm not sure if it's really down too much or if it's doing okay. It's down a little bit. It's down from $204. So we're looking at maybe about like a 20% downturn. So a lot of hits, but potentially a lot of opportunity within as well, which is exciting to see. So if that does sound good, if you are interested in more videos like this and enjoyed kind of taking the time with me to dissect what's going on, kind of take a logical approach to, okay, what's going on with Yieldmax ETFs and their underlying stocks and ETFs, we're up to 7,566 subscribers. Subscribe and comment. Let me know your feedback and anything you guys want to see potentially in the future, and I'll look to make a video for you. Thank you very much. Please do take care, and I hope to see you guys in the next video.